And welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery. We've managed more than $1 billion in recovery. We've helped thousands of business owners and community associations place insurance and recover from loss. That's what we've been doing for over 11 years now, and we're going to continue doing that despite everything that the Florida legislature is trying to do. It's unbelievable what is going on at the Florida legislative level. We understand that the governor is going to be running for president. That was the latest news that just came out just yesterday. He did a Twitter space thing, and great for him. I'm glad he's doing that. But in his wake, as he tries to take on the issue, the national issues for the United States, he's definitely taking care of some special interest groups and not the consumer and not the homeowner, the business owner, the community associations in Florida that were depending on the legislator to fix this insurance market. Without a doubt, they have failed you as a consumer. That is without a doubt. Emphatically, they have 100% failed the consumer to date. There's much of nothing in the legislation over the last couple of years that is doing anything to help you as a consumer when it's dealing with property insurance, whether it's a business owner, community association, or even a homeowner. Much of the legislation that was passed has everything to do with protecting the interest of insurance companies. Well, there's lots of articles that have come out recently talking about the millions upon millions of dollars that he has received from special interest groups protecting the interest of the insurance industry and not the consumer. Now, if that wasn't enough, let's rewind, okay? Let's rewind back to a time of 2008 following the 2005, 07, 08, some marginal storms there. I'd say 06, there's a couple there, when the legislator, after doing an investigation into the impacts of public adjusting, all right, the public adjusting industry was under investigation by OPAGA. There was a report called 10-08, indicative of 2008 when the report was commenced and thereafter published. Well, soon and around that time, there was a move towards this anti-consumer legislation. Much of that legislation was found several years later after a lawsuit, and thousands of dollars was spent by consumers to protect the rights of consumers and their advocates. Was determined that these laws that were passed in the wake of those storm seasons was unconstitutional. All right, so there's all these laws passed that restricted public adjusters, that were going after consumers, that there was a rewind of the ACV, RCV laws. And a lot of changes were made, but many of those were determined to be unconstitutional. And I find that a lot of the legislation that we're looking at today has been enacted that skates the line, and I would argue that in effect is in itself unconstitutional yet again. Mostly because, as was found in those legislative sessions from 2010 to 2012, was that most of it was based on nothing. In fact, everything that was being said in support of the legislation was false, was not supported by actual data and information, and was simply a knee-jerk reaction to the woes and the crying and the moaning of the special interest groups that were protecting the insurance industry. And while those laws were ruled unconstitutional, there's so many changes that have occurred over the last 2 years, I don't even really understand where to even start with my analysis of where we're headed. I mean, I know what has happened. I don't know where we're headed. Like, what is the answer at this point? Now, there's other things to take into account. So the OPAGA report, just going back to that, what it determined is that with the representation of a public adjuster, generally speaking, you're going to receive between 500 to 700% more than if you try to adjust a claim on your own. Now, that is quite obvious, right? If I hire a tax professional to represent my interest in filing taxes, I'm going to assume that my taxes are going to be filed more appropriately, more properly, and more precise. There's going to be more precision. It's going to advantage me more when filing taxes. Just like if I try to represent myself in court, probably not a good idea, right? You're going to hire a lawyer. Why? Because they understand how to navigate the process. Well, I could say the same thing for insurance, public adjusters, and even attorneys, all right? Because they've now clearly become under attack by the governor and his squad of individuals that are doing nothing but protecting insurance companies, right? I can say the same thing for them because the one-way attorney's fees laws, is that in any way can protect the consumer? Is that going to make a more fair market? No, it did nothing. The scales have shifted so in favor of the insurance companies None of this was intended to protect your interest as a consumer. And this Opaga report went into great detail where policyholders hired public adjusters at the onset of a loss, particularly a hurricane, okay, a severe situation such as a hurricane, and in those situations, they received 570% more. Now, this isn't because they inflated the valuations. This isn't because they were committing fraud. No, in fact, the report goes into that. There's very little complaints, as I've mentioned in prior broadcasts, against public adjusters, right? Of the 100,000+ complaints filed over a 10-year or so period, less than 100 of them were filed against public adjusters, and of those, they were just administrative issues like a bonding issue or a CE credit issue, right? So consumers aren't complaining about public adjusters. So why the fuck does the legislation care? Why the fuck does the legislator continue to pass things that are not in the best interest of the consumer to protect the insurance industry? It makes no sense. I use strong language to emphasize the disconnect between what is actually happening and where the issues are and what the legislator is doing allegedly to help us as consumer, protect us and make a more favorable or more affordable market for you as a consumer. You know, the one thing that they're not addressing is the garbage forms that the OIR is approving. Those forms, the products that they're selling you, are garbage compared to what was being sold to us several years ago. Now, pile on top this horrific legislation, the curbing of the statutes of limitations with regards to bringing claims forward, the fee restrictions on public adjusters, the fee restrictions on attorneys. It makes fundamentally absolutely no sense. But what does make sense is that they're doing this because they've received $3.9 million or some massive amount. I think it was actually the total accumulation of money paid by special interest groups to the governor's campaigns, whether both for the governor of Florida as well as his presidential campaign, amount to something around $9.9 million have been paid by insurance industry advocacy groups. All right, that makes sense. And it makes sense why they may be doing this. But when you look at the factual information, the data, the statistics around this stuff, it's not adding up. I mean, one of the biggest things that we saw in last year's legislative session, which really didn't grab any sort of headlines, was the legislation that was enacted that restricted an insurance company's rights to sue another insurance company. Why? Because it was out of control. When a unit owner would suffer water loss in a unit, in a condo building high-rise, the insurance companies of that unit owner would immediately sue or go make a claim against the association without proving any sort of negligence. Now, they've passed two different types of laws or revisions to the laws, with one regarding the negligence and another one regarding whether or not an insurance company, an HO6, can go after an association to curb those issues. In fact, if you actually break down the statistical information regarding this rampant litigation that they used to pass some of the laws regarding one-way Florida statutes and statutory entitlement to fees by your attorneys, okay? If you look at the statistic that was bolstering that, it mostly had to do with this other issue where insurance companies were the bad actor yet again, okay? Now, if I look at the Value Penguin report, which I've mentioned several broadcasts before, and I break down the Value Penguin and you look at the statistics, and consumers are upset over claim settlements. They're upset over payments. Now, pile on the class action lawsuit that was filed at the end of 2022. Whistleblowers, the very people hired by insurance companies to represent their interests in the adjustment of a claim, sued their employer, the insurance companies, for fraudulently changing reports. And there's a mountain of evidence to prove it. There's a mountain of evidence. The testimony was given and the laws were still passed by the legislators. It doesn't make sense. Now, Lester Holt, bless his heart, NBC goes in, investigative research, Hurricane Ian. If you haven't seen it, check it out. Open your eyes. It's talking about what's not happening on the ground after Hurricane Ian. And we know the governor, he got down there with Mr. Petronas and they went at it and they got that bridge built and Petronas came out and said, oh, watch out for contractors and public adjusters. They're a bunch of parasites and locusts. I mean, those were his words. And then he kind of walked that back and then attacked the Florida bar. All of these things were built and passed and are part of the Florida law to protect the interest of the consumer. And that is only thing that they clearly seem to have in mind is to attack the consumer to fix the issue with the market. But what's happened over the last 2 years by passing all these laws? Nothing. Fucking nothing. So where are we headed? What changes should we be expecting to come about with this new legislation that went to the governor just yesterday to get signed? Now, interestingly enough, it requires that a public adjuster produce an estimate within 60 days or your contract's null and void. It gives the consumer 30 days from the date of a loss of a state of emergency to rescind the contract, or 10 days, whichever is sooner. Okay, so beyond 30 days, you have you have 10 days to rescind the contract. In the first 30 days, you get sign it up, it's 30 days from that date. But riddle me this. Why does the insurance company have 90 days to determine a coverage determination? And so often, in our experience, tens of thousands of claims, I can bring on probably any public adjuster in this state of Florida and ask them on average how many insurance companies settle and pay a property insurance related claim from a hurricane. State of emergency typically is announced thereafter. And overwhelmingly, I don't think I'll be able to find one. In fact, if I go and poll most independent adjusters who represent insurance companies, I'm going to guess, and this is a guess, all right? This is what the insurance company is doing, seemingly what the legislature's been doing. They're just guessing, right? Ignoring real facts and just guessing. But I'm using facts. I'm using a basis of experience, which many of them don't, and they simply just look at their reports and ignore real data. I'm in the weeds. So I'm not basing this just simply on, I say, educated guess. I'm going to guess that most independent adjusters would say, I don't know any. The reality of it is that most independent adjusters don't get into the areas within the first 30 days. But a public adjuster's contract may be rescinded in that first 30 days and at 60 days produce an estimate. Damn, I wish insurance companies would produce estimates within 60 days. I wish they would produce estimates within the first 120 days. 120 days. In fact, right now, citizens and state-backed insurer in instances where they admit that because of the situation, they could not produce certain estimates within months of the losses occurring. That's the state-backed insurer. So again, I'm curious as to see what basis did the legislator have to approving and passing a law that would require a public adjuster to do it in 60 days. Really just doesn't add up. It doesn't make sense. There's no supportive information that I have seen, compelling documentation that I have seen that actually proves that the necessity for much of this legislation that has been passed, this largely in consumer legislation has been passed over the last couple of years. I mean, I can go on. I mean, there's, again, a mountain, and I'm adjusting myself. It makes me uncomfortable in my chair. It makes me uncomfortable to think that we are so blinded by money that's being paid. Again, I have no other thing to grab on. I don't understand it. There's literally no. I can only assume, as many have, and has been reported, that it's the money being paid to the campaigns that's influencing these decisions. Otherwise, produce something to me, please, that would compel another sort of opinion. Now, this is my opinion on this, okay? And I'm trying to absorb as much of the information. For instance, AOB, I'll applaud the effort to make revisions and changes. Why? Because I did see some of those issues too. And quite frankly, I think public adjusters, just the same as homeowners and business owners, were a victim of some of the abuses of the AOB by contractors. But does that mean that was such a wide issue, such a widely issue that was taken advantage of? I'm trying to figure out a way to actually articulate this, that it's plaguing our consumers so much that we needed to go as far as to pass the type of legislation there, and then later on then repeal some of it through some other anti-consumer legislation. Quite frankly, if you look at what was passed initially for the AOB issues, 2022, and then where we're at today, it's different. The laws have even changed there. Were there problems? Yes. Were the contractors at times being cheated by poor valuations by insurance companies? Yes. I've seen instances of it where insurance company would just arbitrarily pay 50% of a mitigation contractor's bill or estimate or whatever it is, no rhyme or reason. I saw contractors that get so fed up with it, it was hurting them so much that they almost, at some level, acquiesced to the method of repair that most insurance companies accepted, even though it was not compliant with certain building codes or was not a typical practice of contractors prior to insurance companies influencing it through payments, right? They're not going to pay you for it, so they're not going to do it, and the only way to get paid for it is to litigate it. What option did you have but to litigate, right? And do I believe that the idea of being able to assign your benefits to a contractor for a limited scope of mitigation is advantageous to a policyholder? Absolutely. But do I think that some may have taken advantage and taken it too far? Of course. But I could clearly say that for the insurance companies. But what's being done about that? What's being done? We saw this accountability bill passed by the governor just recently. What did that do? I mean, come on. Is it enough? Absolutely not. Why can't I prove that an insurance company's adjuster, an independent adjuster, committed fraud when they could ever should have paid something? Why aren't they being held to a certain standard? I mean, not seeing the accountability of an independent adjuster or the desk adjusters inside an insurance company that are reviewing and approving the reports submitted by the IAs. What about these managing general agents? What about the construct that's built here? I mean, if you read some of the papers regarding the Florida insurance market versus, let's say, Louisiana, there's striking differences as to why there's not more competition on the side of the insurance and why the pricing model here in Florida is so different than areas like Louisiana and Texas where, well, guess what? They experience quite the same hurricane season that we do here in Florida, but they have a much more competitive market and affordable market, and quite frankly, and I know this because I've seen it, the products that are being sold there are different than what we see here in Florida. And that's, again, coming back to that issue on what kind of products are being sold is still an issue that has not been addressed. In fact, this new legislation bill, it's actually passes off some of the rulemaking authority to the Department of Financial Services to circumvent the legislative sessions we see where public testimony is offered that is intended to sway or to educate the legislating body who makes recommendations to the Senate and House on bills that should be considered and at times that are obviously amended and changed and then become law. Well, in this new law, some of that obligation is shifts from the legislator to the Department of Financial Services. I'm sure it's being sold as a way to streamline this process, but I can tell you, and I would be remiss to state that I'm sure public adjusters, just wait. I'm sure more things are coming and more changes are coming to what you're doing and not what they're doing, right? So this all culminates into a very frustrating situation. And as a consumer that may be watching this, maybe even a government official, commissioners, governors, take this into account, right? Because your local constituents that are looking to you for support, that pay their taxes, okay, that are here in Florida looking for some softening of this market. Well, price may be a consideration, but think about the products that are being sold. Are you actually buying a product that is protecting your interest? Are you buying a product that's going to do anything that's going to, in fact, help and support you financially if you have a loss? Or did you just buy what your bank and the insurance company your bank on one end is willing to accept and your insurance company on the other hand is willing to sell you? Now, a lot of banks, and I've met with many different banking officials, whether they're both here, Florida and Texas and other parts of the state, and I've talked at length about the insurance issue, and it's amazing to me how uneducated they are with regards to the types of products and the cost of those products and what that actually translates to in order to protect their financial interest in that asset, whether it's a business, whether it's a property, it could be a condo association, it could be a single family home. It's utterly shocking how disconnected they are or the lack of experience and knowledge they have in how to even interpret some of these policies or products that are getting approved at the banking level despite the fact that they are not in fact protecting the financial interests of the lien holders in the way that they used to. Okay, and I understand, again, the way they used to. Now, the name of the policies may remain the same, but the content and the product that is behind it, the words and the interpretations of words and endorsements change what it actually, the coverages it may afford to the mortgagor, the homeowner, and ultimately the mortgagee, and the various different lien holders, right? And all interested parties. Believe me, it's not what it seems, and I think you need to get a little bit more interested in that. I also think that it would be nice for banks to step up and just start to look at some of these consumer issues that where banks' interests are not being protected. And I believe that one-way attorney's fees and all these things, this idea that you have to notice the insurance company your intent to file a lawsuit to give them an extended cure period. Again, public adjuster 60 days, right rescission 30 days. Oh my gosh. I mean, the right to cancel the policy and do all these other things to deprive you of benefits under the policy are so much shorter. And the time in which they have to make decisions are so much longer. It doesn't make any sense. Who was this built for? Certainly wasn't built to help resolve disputes and issues, and I think that's one of the most overwhelming things. And with the products being streamlined as far as coverage is concerned, even though the deck pages and the names of them remain the same, what's behind them certainly is not, and it's a lot. It should be alarming to anyone and everyone out there that are consumers, that if you are transacting and buying insurance, think about these things. It's not one insurance, it's not in Citizens, it's not another one, it's not these or that. I mean, I'll be honest with you, even people I talk with, if they don't work these organizations or the adjusters in the field, they're concerned, they're confused. We get letters sometimes from insurance companies that are not up to date, that they're old template, letters that they're sending out, reservation of rights, stuff like that, not consistent with their own even obligations and things that have been changed to benefit them. It's happening so much, and there's so many changes that are occurring. And it's happening so fast that, again, I think that we're going to look back on these last couple years, and I think a lot of people are going to realize that things went way too far, and they certainly didn't help the market. I truly believe that while I think in the short run insurance companies are getting what they want, I think in the long run it's hurt the consumer confidence so much. It's hard to reconcile how you will pass laws that challenge the rights of consumers, okay, and in a way that it advantages or mitigates the potential losses to an insurance company, but the consumers didn't see any sort of correction in the market for so long. And when we do, I will be hard pressed to believe that it has anything to do with the changes that have been made over the last year and a half, 2 years. I will be hard pressed because we learn from history, and historically, that has not been the case. In fact, it's the opposite. It's been accountability of insurers that has led to a softening of the market, because you realize that a lot of this relies on consumer confidence. Now, consumer confidence can be interpreted in many ways. It's not only the consumer that's buying those products, but it's also those that have invested in these companies through stock options, right? And if the insurance companies or industries are complaining about the consumer and its advocates, how it can't make money, that will cut at consumer confidence. So, and as they continue to campaign about this idea that there's an issue with consumers and their advocates, it's not helping any sort of consumer confidence with regards to investing in those businesses. And when you see the reports on the market, and the market hasn't softened at all, even despite all of this anti-consumer legislation, again, I'm looking at these things, big macro views. I'm getting in the weeds here. I'm breaking it down for you. I mean, think about what I'm saying. Like, it's not adding up, okay? It's not there. They're reporting huge profits, a lot of these insurance companies, despite all of the rhetoric about consumer advocates and, oh my gosh, we're, these fraudulent this and fraudulent that. Well, look, 100,000 plus complaints filed against insurance companies in the same period of time where less than 100 were filed against public adjuster. And here we go, another bill that further restricts public adjusters, that makes it less, disincentivize more professionals from getting into an industry to protect consumers. What did it accomplish? What has any of this accomplished over the last couple of years? Again, I'm trying to figure it out. In fact, I will leave you at this. More brokers in the last couple months have been calling us to help them and their clients than we have seen over the last year or two. That's true. We're getting more and more calls from brokers. They don't know what to do. Their clients, their consumers are upset over what's happening in their claims. Lester Holt goes on TV breaking down the hurricane. We've been saying that from the beginning. These insurance companies, the way they acted after Hurricane Ian was insane. You saw the class action lawsuit, slashing of estimates by 80%. Just, again, add up all the facts, details, and information. There's no disparaging comments in here about insurance companies themselves or any particular one doing something. No, these have been honest individuals and professionals giving us information. I'm giving you the same. This is not about one bad one versus another one. That's not what it is. This is about changes that are being made. And a lot of these changes, you don't see the impacts for quite some time. And so starting the conversation earlier on is a way to educate you as a consumer as to what to expect and what to see going forward. So that's all I have for you today. Not a lot of good news there. And I'm sad to say I'd love to come in here every single day to give you the great thing that the market's softening up, talk about some strategy and dealing with some of the things. But the reality of it is that we're in a tough market here. We're not in a tough market just because insurance companies aren't making money, because quite frankly, largely that's not the case. And those that didn't make money, it's interesting if you actually go investigate where some of these insurance companies are in receivership. And some of the, as I've been told recently, and this may be a rumor and I haven't fact checked it yet, but I was actually told that there is one particular insurance company that is in receivership that's still making money. And they actually were lobbying to start to go back to market and be able to sell insurance. Now, it's interesting, right? Again, haven't been able to reconcile this information. I'm working to do that. I'm doing some investigative journalism myself and try to figure out to get down to the nitty gritty of it. But again, where is this all headed? Is it going to help us as consumers in the long run? I don't see it. I've been saying that. Some of the stuff that has been changing and happening, if you go back, many months, I said it was going to happen, and here we are today. It's still the same. I met with some, commissioners, and I was joined at a panel at one point, and I brought up this issue of product. It came off that stage, and I was bombarded by questions about that. They had not heard anyone talking about it. I think that's particularly relevant in the I-4 corridor south, where you're seeing a lot of the frustration with consumers with regards to claims, and where you're seeing some of these products being sold. It's really not adding up, really not making a lot of sense, and we want to continue to make sure that you have all this information. We're going to continue tracking this stuff, giving you to in real time, making sure that you are aware of what changes are occurring and happening. And if you haven't liked, if you haven't subscribed, if you're not following us on all of our social media, as well as YouTube, LinkedIn, Twitter, Facebook, Instagram, then you're going to miss out on this important information. Whether you live in Florida, Texas, Louisiana, or any other state in the country, believe me, while you may hear me only talk about Texas or Florida or New York or New Jersey from time to time, I will tell you that many of these places are used or are bellwether states where when change occurs there, eventually it or some sort of hybrid of it is adopted and will impact you down the line. So whether it's through the products that they're selling or through legislative action, believe me, change is coming. The more and more that insurance industry gets away with doing these things, And whether lobbying efforts have been successful, they certainly have. We want to make sure, again, that you have the information you use. So continue to tune in here every single week, right here, 11 o'clock Eastern Standard Time on the Recovery Report Live. That's what we do. We go live right here in the Griffin studio. So we see you same time, same place, right here on the Recovery Report Live.